Happy Saturday, ladies and gentlemen, Allincrypto here, and welcome back, guys, for another jam-packed daily market update. As always, we've got a hell of a lot to get into. We're going to be kicking things off with a little bit of news from JPMorgan. Now, they gave their 170,000 Bitcoin price prediction in the next 6 to 12 months, and actually, they have acted upon this according to a filing that I'll pop up on screen that was filed on the 7th of November. So yesterday, they have upped their BTC exposure, or their IBIT exposure, which is a BTC ETF facilitated by BlackRock, by 64%. So they're not just talking, they're walking. And they did cite reasons like major liquidations and a kind of retail flush out or deleveraging, and how this may sort of clear the path moving forwards. We will be looking at that in the context of Bitcoin. Then I want to sort of go back to a theme that we've been talking about based on Ray Dalio's Stimulating into a Bubble piece. Speaks about how QE is upon us and what that should mean for financial assets. They should go up in that environment. Now, just yesterday, according to Bloomberg, Feds Williams is expecting central banks to return to asset purchasing soon, confirming what Ray Dalio is talking about. Also, you've got the Fed's Moran. He's very zealous on kind of easing. He's a newer Fed member. He is essentially saying that widespread use of stablecoins could argue for lower Fed rates. It's interesting. Look at what's happening in South America right now. There's a lot of kind of countries that I think are going to end up getting dollarized, or they already are due to the kind of inflation that they're seeing. But this is likely going to continue, and stablecoins are part of a much bigger plan that was beyond the scope of this video. We'll relate all this to what we think is going to happen for the markets, and then, of course, we're going to address the kind of pumps in various altcoins that we are witnessing. Some of them we called out pre-pump, Flux, for example, ICP we've been looking at, a number of others out there. And I think this is sort of in line with what we're expecting for the others versus Bitcoin chart, which is probably the most important chart if you're looking for alt season. And we think this is primed for that alt season to take place. Again, we look at the sort of macro stuff with what the Fed's doing, so on and so forth, because it's relevant. And ultimately, if we can get that right, or there's a kind of encouraging environment from the kind of macroeconomic side of things, then crypto really should shine as a high beta for assets broadly. Okay then, guys, let's kick things off. This is an article from The Block. It says JPMorgan's IBIT exposure jumps 64%. And this is very interesting. This is the filing here that reveals it all. You'll find it in information table. It's very interesting because earlier this week we covered the fact that JPMorgan sees Bitcoin price reaching about $170,000 within the next 6 to 12 months. Bitcoin can rise to around about $170,000 within the next 6 to 12 months as leverage resets and its relative volatility versus gold improves, according to JPMorgan's analyst. The analysts, led by Managing Director Nicholas, said in a Wednesday report that the crypto market has corrected by close to 20% from its recent highs, very normal pullback in regards to this uptrend, with the sharpest decline occurring on October the 10th amid record liquidations in perpetual futures, the largest in crypto history, followed by smaller liquidations on November the 3rd. They said the November the 3rd event came as investors' confidence was further shaken by over 120 million balancer exploit in the decentralized financial sector, which raises fresh concerns over protocol security. So they are doing a typical Warren Buffett and buying when others are fearful. And we now have the kind of proof that they're not just talking the talk, they're actually walking the walk and have upped their BTC exposure via IBIT by 64%. And remember, you guys know all the technical reasons that we have for being long Bitcoin. We have been sure to quieten everybody down in regards to this just being a very normal pullback in what is still an uptrend. It wasn't the top here, it wasn't the top here, it wasn't the top here, it wasn't the top here. I don't believe it's going to be the top here. And I think just quickly to throw the total market cap excluding Bitcoin, we did a video on this earlier this week where we looked at this being a damn good reason to be bullish. When it walks, talks, and quacks like a duck, and you've got quacking all over the place when it comes to the cryptocurrency space and the macroeconomic kind of broader outlook, you don't bet against that. It's a duck. It's a bullish, I think, environment. Time to be getting into crypto. Before we get on to what's been taking place with altcoins, I want to refresh us in regards to what we looked at earlier this week. This is Ray Dalio stimulating into a bubble. Did you see that the Fed's announcement that it will stop QT and begin QE? There's a quote here that I shall find for you. It says, at a certain point, this is from Chairman Powell, that Ray Dalio is quoting, At a certain point, you'll want reserves to start gradually growing to keep up with the size of the banking system and the size of the economy. So we'll be adding reserves at a certain point. How much they'll be adding is something to watch. He talks about the kind of ramifications of this. When the Fed and or other central banks buy bonds, it creates liquidity and pushes real interest rates down, as you can see in the chart below. What happens next depends on where liquidity goes. If it stays in financial assets, it bids up financial asset prices. Stocks are a financial asset price, and lowers real yields, so multiples expand. Risk premiums compress and gold rises. So there is a financial asset inflation that benefits holders of financial assets relative to non-holders. Goes on to a number of other things. It talks about why assets effectively go up, and the fact that this time is different because they've only ever really stimulate it. It's not entirely true, but usually they use the kind of stimulation that we're about to see in regards to analysis of the balance sheet and lowering interest rates to sort of propel a economy that's in trouble. And they've kind of pulled off this soft landing, and this is the first time Ray Dalio says that we're kind of in this, and this is symbiotic with a late stage debt cycle, because where do you go from that? Do you do more QE than you're previously already doing? And then you've got the inflation risks if something bad happened. Usually they reserve this as a right for March 2020, 2008, the 2000s. And I think there's a great shift taking place. Yesterday I looked at the S&P divided by the US money supply. That's about to break out, which I think shows a real deflation. But the Fed is about to go to QE. And yesterday you actually had this. Fed Williams expects central banks to return to asset purchasing soon. New York Fed President John Williams said the Federal Reserve could soon return to expanding its securities holdings, a week after the central bank said it would wind down efforts to shrink the balance sheet on December the 1st. So that's coming very soon, by the way. The net bond purchase would likely be next, long-planned phase of the Fed's approach to matching the levels of cash like assets available to banks to their needs, not a new effort to stimulate the economy so far. The Fed's efforts to, whichever way you look at it, it is stimulating the economy, to right-side its assets holdings have been according to plan, Williams said in his speech at a central bank conference in Frankfurt, delivered Friday morning local time. He added that recent volatility in repo markets shows that reserves, a highly liquid asset that banks trade amongst themselves, have been falling close to levels that match banks' needs. A sign that the modest level of Fed bond purchase will soon be needed to keep overnight lending markets supplied at appropriate levels. Just to show you this, if we pull up the repo market, where are we? Overnight repurchasing agreements. This went from this has been why your markets have done well. This went from $2 trillion to $4 trillion. They're going to start to refill this. Eventually that will work its way into the economy. So you now have a Fed, or the Fed's Waller, confirming this. Ray Dalio outlined this, and remember, we are very much expecting a good time for the S&P, but markets more broadly that I think are going to feed off of this. And crypto should do very well in this environment. We've got a number of reasons to be bullish on the stock market, whether it's the S&P 500 having gone through a bear market, which means a bull market's ahead of it. We're in one. IWM, likely, in my opinion, going to do well. I do believe that. Yeah, it's having a bit of a pullback, but it's at a key technical level. And actually, I think small caps outperform large caps, very interestingly. And I think crypto is going to do very well in this kind of broad bullish environment, perhaps fundamentally driven by some of the things that we've spoken about, and we're deliberately not going into too much detail in it. And one of the most important charts I think there is right now with BTC DOM and the Turtle 2 that all are bullish with a potentially bullish context of markets, certainly a great fundamental story for crypto, is this chart. This is the ratio. This is everything outside the top 10 versus Bitcoin, or with everything inside the top 10. So when smaller caps outperform larger caps, that's a generally really bullish environment for everything, but smaller caps, because they're smaller, are running harder. And this is setting up a textbook falling wedge, in my opinion. And it's interesting. We've had a number of altcoins. And I'll go over to my Twitter and show you that I shouted all these out sort of pre the moves. One of them, Flux, for example, since we called it, was like 150% up. If we look at this, for example, this was one of the altcoins that we called textbook falling wedge. We do the Falling Wedge course on Patreon, guys. If you want to become a patron, now's a great time to do it. Do that course. You're going to get confidence in regards to what we're looking at. We've got this right so many times. I believe this time again. Flux was substantially up since we called that. I mean, there was loads of calls that we're making based on technically near. Also done very well since we called it. We're looking at some downside for the Dixie. Go and give me a follow on Twitter, guys, so you can be a little bit more up to date with this. FET did well. Filecoin, obviously we know about, Flux we've just spoken about. We know about a number of them. I mean, there's lots going on in regards to the altcoin sector. And I think it's symbiotic with this chart, what we're expecting more broadly for the market. And you're going to get a breakout in a major alt season, I think. And there's that great macro backdrop for it all. Bitcoin still looks good. Yeah, it's having a bit of a pullback. I think it shakes itself off. I do think markets are somewhat also wanting the government shutdown to end, because if there's one thing that markets don't like, it's uncertainty. A hell of a lot going on. I do believe that BTC DOM, I think this week's close is going to be very, very telling in regards to it being under our kind of phase 3 top. This is textbook support into resistance, and a broader downtrend will ensue. That's going to link up with the ratio chart that we just showed you, with this going on into price discovery, so on and so forth. When it walks, talks, and quacks like a duck, ladies and gentlemen, it's a duck. We're bullish, despite everything, despite the prior week's been pretty testing from a sentiment point of view. Lots of kind of content creators dropping out. We were going to cover the Zcash stuff, but we're not going to bother. Some fruity stuff going on there, to say the least. That's it from me, guys. I'm going to love and leave you. Thanks, everyone, for watching. I'll see you in the next.